Welcome participants. Today we'll try to understand a concept of financial literacy. So this is the very major concept or important concept while you're dealing with the money. So financial literacy teach you how we build a relationship with the money and how we handle it. So here are a few concepts we'll try to understand in today's session. So first concept is a cash flow analysis. We'll try to understand this concept. Why cash flow analysis is important? So cash flow analysis guides you how to manage the money. Basically, people are more focusing on how much they can earn, much more. So basically, it's not a big deal how you can earn the money. Anybody can earn money. The area or the issue is that everybody is not able to money properly. So here is a tool for you, so you can record each and every expenses, whatever you're spending, and you need to record from where you are getting a money. So after recording it, you will realize what are the necessary expenses and what are the luxurious expenses, where you can save and where you can spend it. So you can understand the cash, how's come into the money, how's come into the cap pocket, and how it goes out from your pocket. So that's very important concept. You need to do the practice for it. You need to record a daily, monthly, or maybe quarterly expenses or annual expenses to understand your personal income statement. Next concept, risk prof that current asset allocation and net worth. So what is meant by the current assets, or what is meant by the assets? So we need to identify the how much assets you hold, how much assets you have in a form of investment. For example, share investment in the shares, debentures, bonds, equities, or maybe in n number of investment avenues. For example, you can invest your monies in the gold, vehicles, or maybe purchasing a flat or plot, a real estate call. So we need to identify the value of that assets, and then after understanding the value, you need to minus or deduct the liabilities which you hold. So after deducting the liabilities from your current asset, you can easily find out how much net worth you have. So the second concept you need to understand in the financial literacy step to identify your net worth. Third one, portfolio risk profile. So risk profile means what? We need to understand in which category you are belonging. Means you are risky or non-risky. So there are only two categories are there. Sometimes we can call as a non-risky as a conservative approach. Means people are taking a moderate risk. So basically, risk is nothing but how much you are going to lose to getting a few certain benefits in futures. So basically, risk profile, you need to understand how much risk are able to take, how much. So according to the risk profile, you can select the appropriate investment avenues for your investment. The next concept you need to understand, that is the emergency fund. So basically, people have forgot they may be face some uncertain events in the futures. So that for that purpose, they need to save their monthly income multiplied by 6. So 6 months a fund they need to keep with aside for their emergency fund. So that is again important concept of emergency fund analysis. Then a more important concept, that is a protection planning. After understanding the risk profile, after selecting appropriate investment, they need to reach towards the protection planning. So they need to put at invest insurance, they need to purchase an insurance for the car, vehicles, life, or maybe sometimes we can call as a term insurance for their persons, or maybe parent insurance for the parents. So basically, insurance which protects your investment. So you need to proper planning for your investment. Then most important, when you're earning, so you need to pay some amount of money to the government. So that is a tax. But the more focus, how much tax you need to pay, you need to liable to pay, and how much tax you can save. So that tax planning you can do under section 80C, and n number of sections are available under the Income Tax Act 1961. So we can find out, we need to do the research little bit on the tax planning. The next, investment planning for the goals. So you have to set some goals. If you already set, so you need to work for the goal setting. If you need to work for that proper planning for the achieving, how we achieving goals in a short terms, medium term and long term. So that part you need to understand if you can do the real estate planning and everything. So last and important part at monitoring, portfolio rebalancing and review. So how we monitor your investment. So first we need to try to understand that concept. Time to time you need to check your assets value, you need to check your expenses, check your income. So everything you need to analyze, monitor, you need to track record of each and everything. Then the last part, portfolio rebalance, means whatever you are making a mix of your investments, you need to rebalance it and review time to time. So that will be help you for understanding or developing a financial literacy at certain level. Thank you so much for the attending this session.